Hi, my name is Jeffrey Schneider. I am an enrolled agent and a certified tax resolution specialist and the author of Help, I Got a Notice from the IRS, Now What? This video is about Chapter 5, about audits. Now let me express something that I said in the book. It said how to avoid an audit. Well, generally you can't totally avoid an audit because audits can be random. In other words, I call it something stuck to the wall and the IRS picked you for an audit. Your return could be perfect, except you just got picked. There's something called DIF scores. The IRS rates every return, and those numbers are the best kept secret since the Coca-Cola formula. So you can just be randomly picked. There are other reasons why you're audited. And audits come in four different types. There is a field audit, which means that the auditor comes to the office if you're a business, and sometimes they'll even come to your home. We don't allow them to come to the home, but the IRS is allowed to come to your business and look over the public areas of your business. The other one is called a correspondence audit. Now, this whole book is about notices and so on, and that unto itself is almost like a correspondence audit. There's a notice called a CP 2000. I call it IRS has this, you sent them that, what is the difference? And that is technically an audit. There are things called office audits, which means you go down to the IRS office and you conduct the audit that way and bring all the files and all the records and the receipts and so on. But you shouldn't ever go to an audit by yourself because you don't know what to say, how to say, and a tax professional, an enrolled agent, CPA can represent you. I'm a certified tax resolution specialist. We took extra courses and testing to be able to help you within an audit. So how do you avoid an audit? And I'm using air quotes to avoid an audit. Well, you basically make sure your return is correct. If you do it through a professional, you're still responsible for everything on that return. You should check it. Nobody's perfect. They could have left off something. Even typos can trigger an audit. If you take a position on a deduction that is not exactly within the guidelines, you have to give them a disclosure statement saying why. How did you come up with cost basis of something that you inherited or you got as a gift from grandma that she bought a stock 70 years ago, and what's the cost basis of the stock? Nobody's going to remember. So if you come up with some kind of off way of figuring out, you have to disclose it. But the best thing to do is to seek out a professional when you get some kind of a notice or you're going to get called in for an audit. So until next time, see you.